Welcome back. Lingering questions still surrounding the Clarity Act as the Senate negotiates getting the bill passed ahead of the 4th of July deadline. Tennessee Senator Bill Hagerty joined us yesterday with a look at where the upper chamber stands now. Watch.
If you think about where the Clarity Act is taking us, it's creating the type of certainty that's necessary to bring the entire digital asset framework into full-blown opportunity here in America. If you look back at the Genius Act that I authored, that brought America into the digital payments arena. We now are in a position where America will continue to lead as the reserve currency of the world because we now have a reserve digital dollar that's backed dollar for dollar by short-term U.S. Treasury securities. We need to get this done. It's important to get it done. It's critical to maintain America's innovation edge. This is something that will be more a matter of focus after the 4th of July recess period, but I certainly hope to see it done before.
Joining me now is Solana Policy Institute president and the chairman of the Blockchain Association Board, Kristin Smith. Kristin, great to see you. Welcome.
Good morning, Maria. It's great to be here.
I know that you've said you think this bill must pass in order for the United States to lead the world in digital assets and protect customers, onshore innovation. But I want to give you your take on the pushback that we heard from Jamie Dimon, because he's saying that it's not fair that the banks are going to face more competition for investor and citizens' dollars because the crypto companies may be able to pay rewards in the current form. Here's what he told me recently at the Reagan Economic Council. Watch. Are you happy with the way the Clarity Act is turning out?
No, because it allows them to effectively pay interest on deposits, stable coins or something like that, without the protection that they should have. And it doesn't do anything for AML BSA. It has almost no legal protections. So no, the banks will not accept it that way.
They won't
and the ABA, the small banks, the credit unions, it's not just the big guys. I'm not worried about stablecoin, but if it happened, I'm telling you, I would have nothing to do with it, and it would eventually blow up on its own. Okay, but that's my personal thing. But I do understand the concern of all the other banks. So,
well, the markup is coming. I mean, what are you going to do about it?
It is. We'll fight it. If we lose, and we'll live.
Yeah. Okay.
But it will be fought. This will not be. No one's going to bow down to this guy, okay, or that company. And he's the only one, and he's spending hundreds of millions of dollars in Washington on this thing.
Okay? He said he's representing the whole industry. Kristin, your reaction, I know you're warning against any weakening of the Clarity Act. You say the Blockchain Regulatory Certainty Act provision must remain unchanged. Your reaction to what Jamie just told me?
Well, listen, I think actions speak louder than words. And if you look at what JP Morgan is doing at the level of the bank, they're actually very interested in blockchain and digital assets. And there's a lot of exploration going on right now. And so I do think, as Jamie Dimon said, they will lose, but they will live, and this will integrate and we'll move on. But I do think that the time is now to get the Clarity Act done. I think President Trump has the right vision. We want the U.S. to be the crypto capital of the world, and getting the Clarity Act enacted is the final step. We're incredibly grateful that Trump has a strong advisor in Patrick Witt, who has been negotiating successfully with the Senate, with leaders like Senators Lummis, Moreno, Gallego, and others. And I do think that there are some people out there, including Jamie Dimon, who have the wrong impression that this bill is deregulatory. It's really quite the contrary. This bill creates regulation for markets. It creates new consumer protections, new tools for law enforcement. It fills gaps that exist today, and now is the time to get it done.
And now, crypto this morning is mixed. We're looking at prices right now. Bitcoin down during yesterday's trading over all the headlines that we were following. The new Iran deal, the Fed holding rates steady, but 9 of the Fed governors suggesting that rates will be higher toward the end of the year. Here's the chairman, the new chairman, Kevin Warsh, yesterday. Watch this.
My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. The committee decided to maintain the target range for the Fed funds rate at 3.5 to 3.75% in support of the Fed's dual mandate.
So what do you think, Kristin, your take on the impact of the Fed policy on crypto and digital assets in general?
Yeah, well, I think for Bitcoin specifically, it behaves a lot like gold, but many digital assets also track Bitcoin. So what is going on with interest rates does have an impact in the market. I do think, though, when we are looking at the broader crypto market right now, it is down a little bit. But when I go out, I do a lot of travel. I go to a lot of conferences, talk to a lot of people in the traditional financial world. What I'm seeing is that there are a lot of institutions that are interested in integrating crypto technology like Solana into their existing systems and use those rails. I'm also talking to a lot of asset allocators that are interested in coming into the crypto space, but what they are waiting for is the clear rules of the road, which is, going back to the Clarity Act, one of the reasons why it's absolutely critical that we get this done. I completely agree with Senator Haggerty on his comments on the Genius Act that really opened up the door for all sorts of new innovation and business activity around stablecoins. And I think when we get the Clarity Act done, hopefully this summer, that is going to provide the same kind of confidence and direction that will allow new activity here in the crypto markets.
Yeah, it's a really important point, and you've argued for Project Open. And of course, putting stocks on chain. Solana is the fastest and most used blockchain in the world, handling over 95% of all tokenized security trading volume. And you saw a new all-time high of $3 billion in real-world asset value on blockchain. Congratulations to that. Tell us how you see the future changing on chain.
Well, it's just the tip of the iceberg with getting assets on chain. It's, Solana is financial infrastructure for issuing and trading assets. You can put any kind of asset on the Solana blockchain. And we're starting to see this with equities. We see this, with things like U.S. treasuries, money market funds, private credit. We're seeing a lot of experimentation and exploration here. I think what's really encouraging to me is SEC Chair Atkins. I think he said this on an interview with you back in December. He is very excited about this. He thinks that this will lead to faster trading. It will lead to lower prices. There's a lot of innovation that can be unlocked when you have common rails that are used for payments, equities, et cetera. And so this is a real opportunity for the U.S. I think, for so long, the U.S. has been home to the strongest capital markets in the world. And if we allow the technology to continue to upgrade and be competitive, I think we're going to be able to, keep this dominance here in the U.S. for the next 250 years.
Well, that's a big statement. And so how much oversight is needed then, Kristin, to ensure that development is not moving offshore? You're right. Paul Atkins is very interested in this. He has taken great leadership on this. Same with Michael Selig, by the way, over at CFTC. What would that backdrop look like? Is it just clarity? Where do you want to see that framework and sort of guardrails in place for this?
Yeah, well, clarity really does add the missing guardrails to this piece. That being said, it's not as if there is no authority on the books today. I think that at the SEC and the CFTC, both of the chairmen there, they're great leaders, Atkins and Selig. They are the ones that do have some authority to streamline and update the rules around how we can do tokenized trading for securities and derivatives. They have all indicated that they're very interested in using that authority and are working through it now. But I do think, if you look back to the Biden administration, they did a huge disservice to the United States when it came to their regulation by enforcement approach and trying to push this overseas. They were very hostile by trying to debank this industry. They were hostile with the lawsuits that came out of the SEC, and maybe lesser talked about, there were a lot of criminal investigations of individual software developers for writing code and then making that software developer accountable when somebody else used it for a bad purpose. And so we need to make sure that we prevent those types of actions happening. And it's one of the reasons why the Clarity Act that has, the new rules for the road, the protections for developers who build and make these products, that is going to attract the talent back here to the U.S. and ensure that the U.S. is the crypto capital of the world.
And you're okay with the crypto companies paying rewards and sort of looking like banks, acting like banks, but they're not FDIC insured?
Yeah, well, they're not banks and they don't need FDIC insurance because they are not rehypothecating their deposits. They are holding the entire balance on their behalf. It is a completely different system, and I think it's one that will serve the American consumer.
It's an important point to make. They're not banks. Kristin, good to see you. Thank you.
Yeah. Thanks, Maria.
Kristin Smith, great to see you. Come back soon, Kristin. We'll be right back. Stay with us.